There is an incredible scandal unfolding at the Bureau of Labor and Statistics before your eyes glaze over. It has to do with non-public secret information being released to a group of what they described as super users, who of course are all on Wall Street in a position to make millions of dollars based on this non-public information. Let's go ahead and put this up on the screen. This is per the New York Times, a lot of other outlets reporting on this as well. They say new questions on how a key agency shared inflation data. I think that's to put it pretty mildly. A government economist had regular contact with, quote, super users in finance, records show, at a time when such information keenly interests investors, keenly interests them. Let me go ahead and read a little bit of this report for you. So this all started back in February. There was an email that was sent to a group of users explaining how a methodological tweak could have contributed to an unexpected jump in housing costs in the consumer price index. And it was addressed to, quote, super users, circulated rapidly around Wall Street. And some journalists got their hands on this and said, wait a second, what the hell is going on here? Is there some official list of super users who are being clued in on all of this information? And the BLS, no, it's just a one-off. This is not normal procedure. Don't worry about it. Well, now we had a Freedom of Information Act request that showed that the agency, or at least that economist who sent the original email, was in regular contact with users in the finance industry. And what you can see here is one of those exchanges where a super user said, hey, would it be possible to be on the super user email list? The employee replies, yes, I can add you to the list. Reporters' efforts to reach the employees identified, the Bureau confirmed, were unsuccessful. They described this individual as a relatively low-ranking but long-time official within the Bureau of Labor Statistics. Standard statistics. I'm confusing myself. Statistics, yeah, I'm right about that. Okay. So anyway, the fact that you have people in finance emailing this person like, hey, can I get on that cool list? Indicates this was not a one-off. And they got their hands on additional emails, some of which did in fact contain significant non-public information. Now, this is like some really wonky stuff about, oh, we're making this methodological change and how we calculate the housing inflation, et cetera. But if this is what you do and you're trading potentially hundreds of millions of dollars based on this information and what it's going to do to the markets, which, you know, by the way, when this inflation data came out yesterday, huge market crash. So if you have a heads up that that's the sort of thing that's coming, you can imagine the kind of bank that you can make off of that. It is an extraordinary scandal. And the last thing I'll say here is, you know, let me give you a sense of who some of the recipients on this were. Apparently, the names were redacted, but their employers were not. So you're able to get a sense of, all right, well, who are these quote unquote super users? They say that many of the recipients appear to have been in-house economists at large investment banks like Barclays, Nomura, and BNP Paribas. Others work for private research firms, which sell their analysis to investors. Some recipients appear to have been analysts at large hedge funds, such as Millennium Capital Partners, Brevin Howard, I don't know who these people are, and Citadel, which trade directly on their research. In at least one case, emails to super users appear to have shared methodological details that were not yet public. So it's exactly who you expect. It's these in-house economists. It's people at these firms that sell their research so other rich people can benefit from this inside information. And it's firms that can directly trade on this research as well. So it's honestly, it's pretty extraordinary. And frankly, based on the details that came out here, you know, the agency's not really commenting at this point, but this supposedly low-level employee seems to have copied, you know, a large distribution list within the BLS. So the suggestion is he certainly didn't think he was doing anything wrong, and is very likely this was sort of, you know, accepted or even authorized and directed from higher level officials who, you know, likely knew what was going on. I seriously doubt it was just one employee freelancing on this thing.
Yeah, no, and a couple of points. One, the New York Times actually broke a lot of the story open because of FOIA. They filed FOIA requests.
That's right.
And got this like vast scope of what had been going on. And all you need to know basically is that in the Times story, it says one of the BLS employees, and this is the Times writes, the BLS had announced the change in a news release in early January, but did not publish details about it on its website until mid-February, 2 weeks after the email from the employee. One of the BLS employees said, quote, "It wasn't appropriate to be sharing information that wasn't public and hadn't been fully vetted." So if the BLS is saying that it was not appropriate to be sharing that information, just internalize that for a moment, because that tells you what you need to know. The BLS says this is not appropriate. There you go. Like,
right.
It's a high stakes, I shouldn't say error, because it doesn't sound like it was an error. It sounds like it was systematic. So not appropriate and on that scale. And those are the two big takeaways, I think, from the story that I would hope continues to reverberate, because there's a lot more to know about exactly who was benefiting.
I'm surprised this isn't a bigger story, to be honest with you, because it also raises a lot of questions about, like, okay, well, if this was just what they were doing at BLS, what other kind of non-public information is Wall Street and their wealthy clients, what are they benefiting from? You know, it contributes, obviously, to not only the sense that, but the reality that there's one game being played among the wealthy and another one being played among everyone else. Just to give you a sense of the tone of these emails, that one that I mentioned that, you know, definitely contain non-public information, they say on January 31, this employee sent an email to his super users describing coming changes to the way the agency calculates used car prices, at the time a crucial issue for inflation watchers. The email included a 3-page document providing detailed answers to questions about the change and a spreadsheet showing how they would affect calculations. Quote, "Thank you all for your very difficult, challenging, and thoughtful questions," the email said. "It is your questions that help us flesh out all the potential problems." So do you really think this employee was just on his own or her own freelancing and compiling this 3-page document with the, you know, frequently asked questions and a spreadsheet showing how they affect calculations and telling these super users, hey, thank you, we're taking in your input, we really appreciate it, we really appreciate it? You really think this person was just freelancing? It's gonna be interesting to see how this agency handles this situation, if they just scapegoat this one employee and say, oh, he or she was just freelancing, we had nothing to do with it. Or if there are larger recriminations and we really come to understand how widespread this communication was, and whether this was the only instance, you know, this particular list of super users and this type of information, or if there's way more sharing of inside information than we have an understanding of at this point.
Yeah, no, absolutely. And the other thing at the end of the story that is noted is they say, after years of remaining low and stable, inflation started to take off in 2021, and it has remained a major news story ever since because it influences Federal Reserve policy. It is a major driver of market trading. Well, yeah, no kidding. And on top of that, I think you put it really well in the beginning of this segment, Krystal, where you talked about the potential scale of this. It's not just one person talking to 10 different people, sharing a document with 10 different people. It is then the decisions that those 10 different people make at all of their places, and it just can have a ripple effect throughout literally the entire economy, as that paragraph highlights. It is a major driver of market trading. So you have this employee engaging in long back and forths, one-on-one. He says, I can't share some of this data, but that's not a benefit that everyone gets, obviously. Of course. So I agree with you. This should be a much bigger story.
Hey guys, if you like that video, go to breakingpoints.com, become a premium subscriber, and help us build the best independent media organization on the planet.
That's right. We're subscriber funded. We're building something new. We want to replace these failing mainstream media organizations.
So again, to subscribe, it's breakingpoints.com.